In the past year or so, Tesla's valuation has absolutely soared, making it about $50 billion more valuable than GM, Honda, Volkswagen, and Toyota combined in terms of market cap. Tesla currently produces about 500,000 units per year, whereas these other four car manufacturers deliver about 30 million units per year. So why is Tesla's valuation so pricey? In today's video, I'm going to go through why Tesla has earned a valuation of over $400 billion and whether I think this valuation is justified based on the information that we have currently in 2020. Tesla is one of my all-time favorite companies, and I think there's so much that we can learn from Elon Musk and the team working at Tesla, so it's going to be a company that I cover a ton of on the channel, and hopefully we can learn a lot from it. Tesla's stock price has shot up immensely in the last year, increasing about 900% since around the same time last year. In order to understand everything surrounding why this happened, there's a lot of information that we need to digest and make sense of. So in the first part of this video, I'm going to explain some of the major topics of why Tesla has seen some ridiculous growth in the last little while, and why this might only be the start of a much larger trend in Tesla's growth story. So the most common way to value a company is by using its current earnings, multiplying it by a number called the earnings multiple, and that will basically have us arrive at the company's market cap, which is the number that the market uses to basically value a company. So you may have learned that a company's book value is determined by taking the difference between its assets and its liabilities. Now this is true, but the stock market doesn't necessarily value companies this way. Stock prices have the future success of a company built into them, and the more future success that the public thinks a company will have, the higher the stock price will be. This is exactly what the earnings multiple represents. The higher an earnings multiple is for a company, the more successful that company will need to be in order for that stock price to represent a fair value for that company. So in other words, if the earnings multiple is super high, then that means the market has already priced in much of that company's future success. And the higher the multiple, the further into the future that stock price is looking. Tesla's earnings multiple is currently sitting at 1,116. Which is extremely high, even for a rapidly growing company. Other auto manufacturers' multiples are much lower. For example, Volkswagen sits around 13. And so we can see from this that the market basically is pricing in a lot more of Tesla's future success into the stock price than they are for other auto manufacturers. Now there's a ton of different reasons why Tesla has such a high earnings multiple, but I'm going to try to break down some of the major reasons why this is true. Tesla is an energy company, not just a car company. And yes, right now they are focusing mainly on building electric vehicles, and they're absolutely killing it. In fact, one of their main problems is that they can't produce enough cars to meet the demand that they have for their cars. However, taking a huge portion of the transportation market share is not the only thing that Elon Musk has in mind for Tesla. Tesla's ultimate goal is to accelerate the world's transition to sustainable energy. This means that Tesla isn't only trying to disrupt the automotive industry, they're also disrupting the oil and gas industry. According to an article written by Forbes, fossil fuels still supply 84% of the world's energy. In 2019, the global oil and gas industry brought in about $3.3 trillion in revenue, and the transportation industry brought in about $2.2 trillion in revenue. These are insanely large markets for Tesla to disrupt, and gives Tesla a very high potential for growth throughout their future. Now Tesla has laid out a very clear path of how they're going to disrupt each of these industries, and I think the market is beginning to understand that the likelihood of them actually succeeding is increasing. The best way to understand where Tesla plans to go with their company is by reading their master plan that they posted on their website. So I'm going to go through how each of Tesla's master plan parts ties into Tesla's future growth and why their earnings multiple is so high. In 2006, Tesla set out to create a low volume car which would necessarily be expensive. This was the Roadster. Use that money to develop a medium volume car at a lower price. This was the Model S and X. And then use that money to create an affordable high volume car. That was the Model 3. And then the last thing was to provide solar power as well. This was Master Plan Part 1, and with successful production ramp of the Model 3, they've pretty much completed this first iteration of their master plan. In actuality, this plan is never truly over because they'll just keep doing this pattern, creating more and more compelling electric cars, making use of economies of scale, and then just bringing costs down for each new vehicle that they release. Throughout much of the first master plan's timeline, Tesla stock had been running flat because successfully mass producing an automobile is an extremely expensive and difficult process, and there was significant risk that Tesla may not have made it through the extreme difficulties of reaching high volume production on the Model 3. Many people thought that this master plan was more of a dream than anything else, but Tesla continues to push the limits of what's possible, and the market is beginning to reevaluate what this could potentially mean for Tesla's future. Investors with big money on Wall Street took the successful production ramp of the Model 3 as a sort of proof of concept, that Tesla could actually execute this plan and repeatedly create the most compelling electric vehicle while maintaining their extremely high margins. The Tesla Model Y was the next step in Tesla's plan, attacking the largest consumer automotive market and has quickly become a top seller in the electric SUV market. Next will be the Cybertruck, disrupting the pickup truck market, and soon after, a $25,000 car will be on its way, which is planned to start being delivered in 2023, according to Elon. Master Plan Part 2 was released in 2016 after closing in on the successful completion of the Model 3 production ramp, and they added many new objectives as to what Tesla was going to be trying to do over the next several years. The main portion of Tesla's updated version of the Master Plan included integrating energy generation and storage for the individual to act as their own utility, and then scaled that idea throughout the whole world. This means providing homes with the ability to power all their needs with solar power and storing it in batteries that let you access this power at any time of day. This is an extremely powerful and disruptive idea, but hardly anybody even thinks about trying to do it because it's an extremely difficult task. This is why I have so much respect for Elon Musk. He's an amazing engineer and he attacks the world's toughest problems. So the question is, will Tesla actually be able to execute what they have planned? Well, based on how things have been going for Tesla over the last decade or so, I'd say they're very well on their way. And if you check out what they've been doing in terms of their battery technology development, you'd be very impressed. If you're interested in learning about how Tesla's battery technology has been advancing, I'd highly recommend checking out their Battery Day presentation. It goes through all of the details, what they've been doing, and it's some really incredible stuff. Elon Musk and his team of engineers at Tesla have made some major advances in battery technology, mostly from a manufacturing standpoint, that are increasing the odds of our world being able to transition to sustainable energy at an incredibly exciting rate. And I don't see any reason for this progress to slow down. Betting against Elon Musk has not worked for anyone, and the market is starting to see that. Now obviously there's a ton more information that we'd really have to dive into in order to understand how much value Tesla could potentially create over the next several years. But from a high level perspective, we can see that these are some massive markets that Tesla is disrupting, and there's some huge potential for growth. So $400 billion as a valuation doesn't seem incredibly high when you take all this into perspective. However, this is a fairly subjective statement, I guess, and depending on how well you think Tesla is going to be able to actually execute the plans that they have ahead of them is going to determine whether or not you think that the company is either under or overvalued. Nobody can tell you what's going to happen to Tesla in the future, and that's why it's such a highly debated stock, because it's got such a high earnings multiple and people expect so much from this stock. But what we can do as investors is gather as much information as possible so we can make the best educated guess as to what their potential future valuation would be, and whether or not that would be a good investment at this point. The more information that you can absorb regarding a company, the more accurate your investment decisions will become. And so this is the main goal with any company that you want to invest in. You want to make sure that you do as much research as possible, and that way you can maximize your return on investment. In future videos, I'll dive a little bit deeper into some of Tesla's different businesses and how much they could potentially be worth, and then why they've also positioned themselves to be very likely to be successful in each of these industries. Your job will be to take the information and try to make your own conclusions based on what you know about the company and what you think is likely to happen in the future. So hopefully this video gave you a good understanding of how to value Tesla and why that valuation of $400 billion could be justified. Based on what you guys know about Tesla, do you think that the stock deserves to be valued at $400 billion? Do you think that there's still room to grow? One of the main objectives I have for this channel is to create a platform for discussion where we can share information about Tesla and help each other understand where the company might be headed in the future based on new technologies that are being developed and all the things that are constantly changing over at Tesla. If you enjoyed the video, consider hitting the like button and subscribe if you want to see some more of this type of content. I'm Sam, this is Limitless, and I'll see you guys in the next one.